What if I told you that everything you thought you knew about Canada's housing market was about to change? The broader Canadian scene isn't painting a rosy picture, as consumers and business confidence slips were reminded of the gloomy days of the initial COVID lockdowns and the financial crisis of 2008. The Conference Board of Canada reported that over 37% of individuals felt that their finances worsened in September. Toronto is often seen as Canada's economic barometer. Sales are down by a steep 5%, but here's the twist: inventory is skyrocketing. More homes, fewer buyers. It's what buyers have been waiting for, but a seller's nightmare. New listings in September jumped 11% month over month, and an astounding 44% increase compared to last year. Over in Vancouver, it's not just the skies that are cloudy. Home sales plunged almost 12% in September, and just like its eastern counterpart in Toronto, listings are rising. By how much? A significant 16% in September. The homes are there, but where are the buyers? Then there's Calgary. We're defying national trends and stealing the spotlight. Sales might have seen a 7% dip in September, but look at the bigger picture. They're up nearly 30% from last year. The housing inventory is tight, and with new listings down by over 17% at the time of this video, prices are rising and fast. The average price has surged almost 9% year over year. When we put Toronto, Vancouver, and Calgary side by side, the differences are glaring. Toronto and Vancouver, more homes, cautious buyers. Calgary, fewer homes, eager buyers. Calgary's prices might even surpass the national averages as we see the demand and population grow. Zooming out, we're seeing larger forces at play. Canada's labor market is cooling. International ties, especially with India, are tense. And then there's the shifting landscape of temporary workers and international students, with surges and drops that directly sway housing demand. International students contribute over $22 billion per year to Canada's economy. Immigrants are 40% more likely than a Canadian-born individual to own businesses in knowledge or tech-based industries. Immigration has been at the forefront of news articles lately because of the housing shortage we've seen in major metros. But slowing or stopping immigration or losing close international ties could severely impact the Canadian economy. Calgary has had a very rich history of booms and busts, but now we're showing a different side, a more positive side. It's become a beacon of both domestic and international migration. Our blend of affordability and opportunity is a strong magnet. But if history has taught us anything, we need to still remain cautious. The highs are highs, but the lows can be steep and very depressing. The narrative of the Canadian housing market is complex and it's shaped by global forces, national policies, and local events. As we approach the end of the year, there's two things that stand out that we all need to be cautious of. Rates need to come down and household debt needs to be kept under control. We've all been hearing higher highs for longer, and I don't think that's sunk in yet. If rates don't come down over the next 4 to 6 months, I don't see how Toronto and Vancouver prices won't continue to fall and more buyers or investors will continue to flock to Alberta. Compared to the rest of Canada, we're still cheap and we have a very bright future.